A great company is not a great investment if you pay too much for the stock. I love that quote because that's what we talk about every day here at chartingwealth.com, knowing what the stock or the ETF's price is doing. And what we see happening right now that we've warned about over the last few days is, of course, we see a plunge taking place. Those of you who have been with us, we saw this happening last week, did we not? We saw things blow off, move through our weekly trend line. We had no trades going on in the market during that time period because prices were getting very shaky. Lots of questions going on. And what do? Well, first rule, don't lose money. Second rule, remember first rule. And of course, we were waiting for an opportunity to present itself. We've been talking about the market topping off. In fact, I've been doing video after video about you preparing for the coming market crash. Not that this is it, but to realize things do not go up forever. Now, the market is down substantially today. The S&P 500 down 2.47%. The NASDAQ down even more. The tech stocks down 3.47%. Consequently, as I quote Jim Cramer all the time, there's a bull market somewhere. And where do we see things going up? Bonds and, of course, gold up over 1% for the day. Now, let's go ahead and start figuring out what's going on. Are we in a down trade yet? No, we're not. Why? Because we don't have a confirmed weekly vertical crossover. In fact, you aren't to get panicked at this point. If you look back on our charts, we've had bigger down candles. In fact, the last big pushover going down was actually as big or bigger, had a much longer wick on the bottom for the week. And how much more did stocks go down the following week from the opening at 285.37 all the way down to a low of 233.76? Now, that's about $50. Is that enough to make per share in a virtual trade to have done well on a $280 ETF or stock? You're damn right it is. Now, those of you might be saying, wait a minute, what's this clown talking about? How can you make money when the market goes down? Well, folks, it's real easy with just a little bit of sophistication. You can go to something like ProShares Short S&P 500. Look at what happens. See the big down candle? Now, when we go to the opposite, this is an inverse fund, and it actually goes up. Percentage by percentage is the goal when we see the S&P 500 going down. Now, one thing you can do if you've got just a great deal of money in the S&P and you don't feel like going short, you can just get out. Let the price drop as it did previously, starting back in, what was that, October? A few days into October, about mid-October, dropped all the way down to December. You can just wait and sell, let everything drop, and then buy back in. Or you can sell, buy the inverse, and then make money as things go down. This is not rocket science. You can look back at our charts and see our weekly vertical crossover lines and how they work again and again and again and again. They work, folks. Why do they work? Because we chart the market very simply with our price percent oscillator, with our derivative oscillator. We use trend lines. We use Heikin-Ashi candlesticks. We make it simple, but exacting and accurate. Is it always perfect? Of course not. You can't plan for everything. There are times when things will fake out on the weekly chart. You can find one if you look way back in here, back in mid 2017. Yeah, you can find where there are short pullovers, but when you consistently track and trade appropriately, and not just using the weekly, but also using your 2-day and your 4-hour charts, that's what gives you more and more consistency. So we have no trade at this time going down in the S&P 500. Why? We're going to obey the rules and see that this is truly going to be a crossover going down. There's going to be enough energy to cross over like it did back in October of last year, crossing over on our price percent oscillator going down, which typically means weeks of down movement, plenty of time to capture trades. You get greedy, what happens to hogs? They get slaughtered. We're not going to be greedy pigs. We're going to obey the rules. And if this sets up to be a down trade, we will be ready to practice that. The caveat always is we're not a stock calling service. We're an education firm. We're not giving financial advice. We're asking you to practice trade with us, learn how to do this. And once you get good, and you can do this accurately time after time after time, then and only then can you make up your own mind what you want to do with your money. You might just want to take it all and go to Vegas. We don't gamble here. If you like gambling, that's the place to go. Otherwise, we obey the rules and try to make all this work. Let's go from the weekly to the 2-day. We see that we, of course, the prior 2-day candle ended on Thursday. This candle represents Friday and Monday. It is a completed candle. We have 3 down candles at this point. And of course, we have a decent trend heading down. Price percent oscillator kicked over for an even greater down move. Derivative oscillator gained lots of downward momentum. We go to the 4-hour chart and we see it trundling down, down, down. Down in the morning, down in the afternoon, really kicking over, going down. And again, not a surprise to us because we already had our 2-day chart rotate over, going down, of course, back on Friday. Again, none of that is a surprise to us at all. We were standing by watching this. That's why we say over and over and over again, what do? You pay attention first and foremost to, and again, that was the 3rd, not the Friday it rotated over was not last Friday. The 3rd of May is when we had our rotation over, when we first saw this happening. So over a week and a day ago in market terms. So what do? We pay attention to these charts. We follow the rules. We don't get stung. We obey them. That's what it's all about, my friends. That's what we do here. That's why what we do every day for you and you do for yourself is so incredibly valuable. Let's go to the Qs and see what's going on there. Looks very similar to the S&P 500. Big down candle starting the week off, getting closer to a crossover going down. Hasn't happened yet. Can't even call it until the end of the week. Derivative oscillator has been losing momentum since last week. Red spinning top last week, meaning indecision tending down. We're seeing that play out. I know what I was thinking too. Listening to CNBC, Bloomberg, reading the Wall Street Journal and Barron's and everything else about what might be happening. Well, you know what's beautiful about stock charts is you can see actually what is happening. You can separate the signal from the actual noise. You can see the signal. Here's the signal. It's right there. It's been before us for well over a week. We go to the 2-day chart. We see 6 days of down movement, strong down movement, building down movement on this. Just like the S&P 500, we had the 2-day chart crossover going down Friday before last, the 3rd of May. Building, we see the derivative oscillator going down, price percent oscillator heading down at even greater levels. 4-hour chart down in the morning, followed by down movement in the afternoon. Price percent oscillator still cranking down, derivative oscillator losing some downward momentum. So we'll continue to watch, pay attention, see what we see. Price movement is, of course, well below the weekly trend line, and we're going to actually redraw our 2-day trend line so that we can track appropriately the down movement that we have going on. Remember, when you draw trend lines, bottom up. If the chart's going up, you draw it from the bottom. Going down, draw it from the top. Now, we leave stocks. We go to bonds. And what do we see going on with bonds? Nice big candle starting the week off. Bonds, of course, bouncing off the red signal line back on the 3rd of May when stocks were crossing over on that 2-day chart going down. The weekly chart was bouncing off the red signal line the following week. And so far this week, derivative oscillator popped over to green from red on Monday morning, and we see a big green up candle forming. This is only the first day of a 5-day candle, so we can't call it yet. You never call a candle until it's drawn, but we can sure see what it's trying to do. Derivative oscillator heading up, price percent oscillator heading up. 2-day chart three big strong candles moving up. We're going to redraw that 2-day trend line from the crossing over going up. Look at that. We've connected three candles quite nicely. That is a nice trend. Derivative oscillator, price percent oscillator crossed over at the same time. That's typically indicative of a decent, strong, longer lasting crossover. We like to see that happen at the same time. That's happened both times in bonds here over the last two crossings over. And again, that's what we like to see. Means the charts are accurately predicting for us what's going on. And we see the derivative oscillator gaining upward momentum also. We go to the 4-hour chart. What do we see? Price movement well above the 2-day trend line and heading up quite nicely. So again, we were waiting for a pullback for a jumping in point on the 4-hour chart. Haven't had a trigger to allow us to jump into that at this point. Remember, we have to have a pullback on the 4-hour chart crossing over in the opposite direction. Then once it crosses back in the direction of the 2-day and the weekly, we pull the trigger on that and jump in. You want to understand more about what we do? We have a great book called Charting Your Way to Wealth. 10th printing will be going out to all of our new purchasers. The 10th printing of our book. And if you live overseas, you will see a link in the show notes for everybody in the United States. You can take that link and go and purchase the book. If you happen to live overseas, though, you can't purchase the book at that site. I can't explain why Square won't allow us to take foreign orders, but email us cw@chartingwealth.com and we will send you a PayPal invoice and we will get your book out. We've sent many books out to people all over the world. We'll get it to you. Sent out a whole bunch on Friday. So again, let's keep pushing through these charts. We appreciate all of your support, folks. We're now going to go back to the weekly chart. Remember, we always start with the largest chart, work our way to the smallest. That's the biggest wave. That shows you first what's going on. And remember, the bigger the wave, the bigger the money. Any of you who've ever tried day trading know you're trading for pennies, dollars perhaps. We're talking about lots of money in our virtual trades when we're looking at big charts. What did I talk about there on the S&P 500? $50, in a down move last time. So again, and sometimes it can be more than that. That's per share. So these things are big moves when we have big charts. Now, gold crossed over going down back on the week ending the 29th, and gold took a while to punch through that 120 down to 119.50 mark, and it's gone up considerably for the day, 1.01%. Derivative oscillators losing downward momentum. Price percent oscillators not flat, but actually heading up a little bit. Hasn't crossed over, but we do see a big bump up in gold. The biggest bump up we've seen in gold since, we have to go all the way back to the week ending the 22nd of February. And that is where gold topped last time. So again, big, strong up candle. And still negative though. We are not in a weekly vertical crossover. Could be that way by the end of the week, but we'll hold our breath and see. We do see we had a 2-day crossover win. That actually happened back on Friday the 9th. We already saw that coming. In fact, we saw gold starting to trend up all the way back on the 2-day candle ending Tuesday the 7th. So again, we are seeing more up moves in gold. Big wick on the top, a strong up candle, price percent oscillator heading up, derivative oscillator gaining lots of momentum. What's going on that 4-hour chart? Bumped up big in the morning and then sort of sideways in the afternoon. Price percent oscillator heading up, derivative oscillator. Don't have a trade. Why? Because the 2-day's in a confirmed up move and the weekly's in a confirmed down move. Things have to shake out in gold before we can jump into any of that. So again, market is in big flux, both with bonds, both with gold, both with stocks. So we are waiting to see how that shakes out, and we will be ready to take advantage of all the trends that set themselves up for us to enter. So keep your powder dry. Pay attention. Be with us every day. 10 to 15 minutes is all we ask from you. Every day, though. That means every day. That means persistence. That means dedication. That means learning what really matters. If you want to set up your own virtual printing press to be able to make money when the market's up or down, to always find a bull market somewhere, or almost always. I mean, in times of flux, you got to wait for stuff to sort its way out. But when it does, to be able to jump into successful trades, you got to practice, my friends. How do you get to Carnegie Hall? Practice. How do you get good at things? You follow them. You pay attention. You do a little work on them day after day after day. You can do this, but you have to start now and you have to stay with it. And it will be the most valuable. You will look back in time and say, that 10 to 15 minutes a day was worth, I don't know, hundreds of thousands, millions of dollars for you, depending on how good and dedicated you are to this. If you want financial freedom, if you want early retirement, if you want a comfortable life, this is an opportunity that anyone out there can take. Most people won't. Most people will get excited. They'll do it for a while, then they'll give up. That's just the way it is. But for those few of you who will stay dedicated, it will be worth its weight in gold. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Buy the book. Support us as Patreon supporters. We do all this for you. God bless.